There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Let's take a look at the craziness that is today. And let me just open up the Forex. For those of you not familiar with this, I try to do these broadcasts twice a week. Essentially, the most important part is to go through what is showing up news-wise. I always apply the filters, show just essentially the red folders. Yesterday was banking holiday for a big chunk of the planet, not in the U.S., but essentially most other countries. So not a lot going on. Typically around holidays, the great example why I started off with this S&P chart, this is just the last 5 minutes. It's been a total face ripper today. So this is a great example, not necessarily as much in Forex land, but in equity land, you basically want to have always the concern that, and I've talked exhaustively about this the last 6 months on something, but if you have sort of an even keel rolling into a holiday week with, a series of positions, assets, equities, what have you, a bunch of Forex positions, and there's been sort of a flat move on them, bet your bottom dollar that more than likely these are going to get squeezed, especially if you're in a downtrend. You can always have what I like to call a face rip to take you back up into certain areas. So without boring us all on that, it's just a 5-minute chart. So take a look at the dailies. I go all assets and I start on the charts. Ideally, we want to make this screen larger. And you want to go through this and spend a lot of time on equities. I know some of you guys started to trade more and more in this area as far as some of the different positions offered versus the MT4 platform. But, as far as currencies goes, let's just take a quick peek. By the way, on Saturday, if you hadn't caught the forecast, that's great. And it wasn't really a forecast. It was more of a presentation of the macro compass and Alf. And his gang that I think has been really good at summarizing global macro. That's sort of what they've known for. These guys have gained just a ton of notoriety and put a little spotlight on some of their research going through how it can affect. Talked a little bit more about the yen on Saturday than I normally do, but addressed some of the issues that we're seeing. I mean, no surprise, U.S. dollar's been going up. The vast majority of other currencies you could see on the screen have been going down, especially the yen. This is certainly creating some issues, and I don't really want to, go into belaboring it because it sort of forces you guys to go back to the Saturday presentation and listen to what I talked about. But just a heads up on kind of that. And I sort of look at Saturday as maybe like sort of a special presentation on understanding macroeconomics. All right, so continued downward in one of the stronger ones, not a very recent, but certainly in comparison to the longer term whole quarter of the charts you guys are seeing here. It's approximately a 3-month window into what some of these movements have been, but extra weakness, almost at new lows. not quite at new lows, hovering off the edge of the cliff, and still with much further south to go, depending on how this all breaks out. New lows and mired in a long basing period for the Canadian dollar. So what else did I want to address as far as the events? So it covered all of this, lots of holiday stuff, nothing today. Do note on Thursday, debate on the global economic this spring's meetings. The only thing I would say is an outlier to be careful for that has been a fair amount of rumblings on is Bullard, who is almost always an outlier as far as one of the 12 regional Fed governors, and whether he's active as a governor or retired, he's always sort of been a special fish in the fish pond, if you will, because he's very honest. He's been actually signaling like a 75 basis point increase by the Fed. Take it for what it's worth. It's just a risk issue, in my opinion. But it certainly could provide some issues on, essentially what's going on. So if it's a risk issue, I'm going to make you aware of it. So BOE Governor Bailey speaks essentially this whole hour, and keep in mind this is Eastern time, so you guys always want to make sure you get these times adjusted for whatever your time zone is, but you're seeing this is Eastern time. But always have Forex Factory calendar bookmarked, in my opinion, along with FinViz previous. Let's go into the charts. Been a lot of new features added to TradingView. If you guys haven't seen it, you can always go in. Again, this is certainly a risk issue, and explore what's new and go through the whole list of what's new. You can actually sort these out, and they have a little mini blog post on each of these new ones. And a lot of the recent updates have really revolved around making windows easier to see. So if you have limited real estate, I also smashed that some of the best money spent ever in investing is having multiple screens. I'm down to just 3 large ones, but I've had 8 at points in the past. So it's just a bit of an overkill, but I think it's important to to just have a lot of coverage on different screens for what you're doing here. So in any case, let's take a look. DXY. Do note there's been a little more activity on Twitter, not only by myself, but by, I should say, by Elon Musk and those wanting to take over potentially, right? But more importantly, there's been a lot of really good posts, especially from Jeffrey Gunlack. He's a big guy I follow. Owns Double Line Capital in LA, big credit-based hedge fund. I don't know if you guys saw this as well on the Telegram channel. Let's see if I could drag this in here. I thought this was excellent. This is totally on the theme of risk management. And let's see if it showed up okay. I think it did. So again, I abdicate a lot. I don't know if you guys could see this, but this is just my Market Watch channel. I abdicate a lot for always trying to find the best people to follow. And the best people to follow are the ones that have usually made it big, right? They are okay, not necessarily with talking their book up, right? But just sharing and dropping knowledge from brilliant minds, right? So sort of along the lines of James Clear, Atomic Habits, which is one of my favorite books, at least as far as an organizational and a motivational thing. I mean, the key thing is following people that have no bias, right? The vast majority of people that you hear on television or what have you, they have a bias, okay? In many cases, they're talking up their book. And one can say, well, isn't Jeffrey Gunlack kind of talking up his book because he owns a big hedge fund that deals in bonds, right? Yeah, you could certainly make that argument, but he has been more honest than most, in terms of the billionaire hedge fund crowd, trying to just help out the common man, right? This is exactly what Dr. Michael Burry has done. This was an absolute fabulous speech that he held. This is a video that Twitter does not like. This is a video that YouTube doesn't like. They all come from the same crazy crowd because this is a speech that's very much against the mainstream. It's very much against how things are run. If you don't know who he is, he's the genius that shorted a whole bunch of mortgage-backed pools, fooled almost everybody on Wall Street with a monster short. They made a movie about him in Hollywood. It's called The Big Short. Excellent flick. Although, in all fairness, I do think Christian Bale's portrayal of Dr. Burry was a bit outlandish. He is not the nutcase brain that he's perceived in the movie, as you will certainly see by this speech. But I would recommend watching it. It'll give you a different perspective, sort of that conspiracy theory thing, right? But with just an absolute brilliant mind to put it into general macro terms, right? So there you go. That was my tip for everybody today in terms of fostering your education and learning to think on your own. Another thing I wanted to talk about the US dollar. Let me just pull the chart up here. All right, so you know what? Before I look at that, let me just back up. So we're looking at a daily chart, and I don't know, it's probably too much noise in this chart, but ideally what you want to see is the intricacies of the channels that have previously plagued this movement, right? So as we're coming into, and obviously this is pandemic, so the difficulty in this type of technical analysis is using it as any sort of base framework for what's the norm, right? And it's not the norm because it's pandemic related. You can learn from risk management in terms of all the different movements. And realistically, I talked a lot about this on Saturday, but realistically, this whole move is probably going to be a short-term thing, right? Why? Well, because a flight to safety in any kind of uncertain terms is going to involve flows of money out of what? Risk-based assets like equities, right? Futures, commodities, right? NFTs, dare I even say that? Notice how they've just evaporated in value, right? I laughed at some of the numbers that were spent on this stuff, which to me is like fairy dust, right? In terms of its value as worth. But people paid the money for it. I'd imagine it's usually people that just had a ridiculous amount of money to spend, so they can brag to their friends that they spent $28 million to buy Jack Dorsey's first post on Twitter, right? Which barely is garnering a couple $100,000 now in value. So you have a flight to safety that typically happens during periods of unrest, right? Periods of recession or depression, I say, or some sort of financial or a global geo crisis. Not sure you'd categorize the war in Ukraine as a sort of World War III, but many of the pricings in of the movements very early in not only the pandemic, but this were on that sort of Hindenburg disaster type mentality, right? And then things will almost always revert back to the mean. They may get crazy moves outside of, bands or channels or any type of stretched measurement in these areas. Bollinger Band's one of my favorite. It'll always, typically, if it's a well volume traded asset, will revert back to the mean, right? So essentially it's a snapback of a rubber band movement. I've talked a lot about that, but this is kind of what I think is going on with the dollar right now. So I think at some point we're going to see, if you look on a weekly chart, and this may be a little easier to sort of bring into perspective, Yeah, it's actually not enough. Let me just try here. Let me try full screen now. So really, I mean, I honestly think the movements in 2016 we're looking at here, I'm pretty sure these highs are sort of what we've been magnetized toward as the dollar. You know, I seems to me they're gunning for 102. You know, it's basically a buck away. So we've broken out, and you know, the longest term that I can see, the most important resistance is like right here, 102, basically the century mark on the dollar. We've been there, haven't closed above it. We have during the whole crisis of latter part of 16. It's the highest it's been. Actually, let me take a look at. Yeah, it's not showing much. Back out of that. Let's do monthly. And let's reset it. So we can look back and see the whole shebang. Gotta go way back to see this. But essentially, from a monthly perspective, you can see that 102 area. It's going to be pretty much critical in its sharing and so forth. But have the essentially looking at longer term, highest ever was 120, long way away. We probably will head towards 102 and spend some time there. If we really rip into this area, let me show it a little more accurate. If we really rip into this area, let's do a manual adjustment here. If we burst into this area and we overshoot it, let's say we get up towards like the 103 area, almost every other pair, at least in major land, that's pin action, if you will, off of the movements in a dollar higher, I think you're probably going to get a pretty good rejection reverse up there. I could totally be wrong in this assessment, but what I love to see is flashes up into an area where we've had sort of like we've just fried every short that exists or longs in some of the other currencies, right? Shorts in the dollar, longs in some of the other pairs matched up with it. These are good trades to take as fades, right? So again, one of the few times I talk about, you know, I talk a lot about, you know, sort of the freight train coming into the station, maybe not the best illustration here on camera, but coming into the movements in there have a tendency to be sort of overshot, right? And you very rarely want to just, here's the train coming, you just stand in front of it. I'd rather just let the train go by and grab onto the caboose, if you will, right? This is one of the trades you do the opposite. So you'd let that sort of reverse take place. You're never going to try and catch the very top, but you just want sort of a flash into this, and then you're short on the way down or long of some other currency that you're playing this on, right? So this is ideally the type of movement, and it is the only one I've ever taught to students over the last decade that is what's called an extreme out move, meaning we'll fly into something. Typically, it's touching the top of a Bollinger Band, like you see on the chart there, and it's some sort of reaction back. So talked about that about a fair amount, but if it's played in the right context, there is just an absolute ridiculous amount of high percentage of that being effective as a trade. Pretty cool, actually. All right, what else I want to share? So I talked about a lot of these currencies over the weekend. Let's take a look at it's funny, we're getting everybody hit me up on Telegram now, all the management. So I told everybody I'm changing my times on Saturday, and everybody's head's probably gonna fly off. I gotta change all our our posts and robo-bots on Telegram, right? Let's take a look at the coinage. Long-term chart here. I don't think I showed that on Saturday. I forget. Let's drop back down to a weekly. Put a little easier perspective to see. Yeah, really the bottom line, dropping off in volume as we're mired in what could be argued as a dead cat bounce right here. Typically, these types of patterns will play themselves out in some sort of lower previous zone, low touch, right? Does that mean crypto is going to do that? I probably have more shot at being wrong with that assessment than I do with anything, but I still think at the same time it's important to look at that. Yeah, it's pretty much all I want to say for that. I haven't shown Ethereum in a while. Let's take a look at gold spot. Again, weekly chart, it's cutting out the noise, and I think we have a better perspective to see what's going on. I did get a subscriber ask me the other day, why do you spend some time on precious metals? Because there have been points in the past where precious metals have absolutely been the center pin of the pin action, right? I talk a lot about pin action, and it is more just a very simple illustration of energy that moves from one pin through the other. What's it, 13 pins? I forget in bowling. The center pin hits the pins behind it, and the energy sort of gets strung out, hopefully get a strike. But there's varying degrees of how you hit that pin and how it moves in reverberations and, sort of waves, if you will, through the marketplace. The rip of the dollar higher has obviously been the center pin, so I always start the reviews off with the dollar first. But at some point, gold may take more of a center stage. Remember, oil was for a while, and now that's fallen down as well. I do think we'll probably go back up and see the top. And whether or not the absolute unloading of gold, precious metal on the market when prices have ripped up again will be interesting to be seen. At some point, what happens with a lot of this stuff is you just have, because many times we've come up to this level on this weekly chart here, we had a sort of a time where we made the all-time high here. This is a while ago. Obviously, this is pandemic. There's a lot of sellers sitting up there, right? And they took it all the way back down. And then we've been basing since then, and we've just broken out. And this is more of like a flashness, right? But what this told us is we really auctioned way high in probably more likely the futures price on this, because we're just looking at the spot, not the futures markets. But there was sellers up there, right? So if somebody was waiting to take this lower, there was a seller position higher. So what that still tells me is if we go back up there again, maybe there's sellers again, and this isn't necessarily the pattern that's just specific to this precious metal, but this is something to be alert on anything. I mean, these are the types of things you make enough shots against the top. What happens up in this area is you have a couple of big players. I talk about them being as a group an OTF, other time frame players, right? They'll step in and take the market to a higher level. It's like crazy in the office today. Like bazillions of people running around here with appointments and stuff. So excuse any intrusions. Oftentimes, if we come up against an area like this and you'd have to just make up a number. Let's say 3 huge other time frame players. One's a sovereign wealth fund, right? Maybe there's a couple of mutual funds, or some sort of hedge fund or trading desk or whatever family office around the globe. Consider those to be institutional, bigger players that have different thoughts in mind for how an asset class is going to be held. When they have what's called initiative activity as a group, they will way beyond retail. They can take an asset price up to another level, right? It's called one time framing up. It's called initiative activity. Those are things that you absolutely can see on a market profile chart. Maybe not as easy to see on these candles that I spend most of the time showing, but the point is that if you have the ability to view a market profile chart, which you can do on something that has a lot of volume trade, you can actually view them on TradingView as well, the chart system or whatever you're using. Key really is that it's going to be something that should absolutely just come out and hit you in the face. And if you know what you're looking for, and you're never ever going to want to step in front of something like that, you're always going to want to ride that. So it's another example where you don't want to stand in front of the train, just let the train go through the station, and then grab onto the back. What else do I want to talk about here? 5 minutes, okay. Everybody's bugging me. Right, so what else I want to say? I think that can be it for today. Yeah, I think probably what I can always be faulted for is I have a tendency to go a little too deep on these subjects. I should stay just a little more big picture. So one of my many faults. So, but I wish everybody a great trading week. It is essentially 2 weeks left in April. Do note that any changes in the time, we're going to keep the Tuesday around 1 p.m. We're going to try and have the Saturday call at 10 a.m. Eastern time. Just remember, that's a time change. So I wish everybody a great trading week. Steve Vettel, off the mic.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.